Good morning. Happy Saturday. Good to see everybody. How you guys doing? Mr. Crypto Mikkel, I was just trying to schedule the redirect, but I don't know if you're going live. So let me know in the chat if you're going live. Good to see you guys. Welcome back to the Daily Grind. This is where we watch news from YouTube around the community, crypto news. You guys haven't already, hit that like button. Appreciate you guys for hanging out. Let's see who's in the live chat. We'll go from there. Crypto Frank, what's up, buddy? Patrick Murphy, we have DJ Mines, Kyle Rosa, Black Cat Crypto. What's up, buddy? See who else is here? Leo Lustig, Max Voltage. Yes, that's one thing I wanted to mention. So tomorrow, Mr. Max Voltage on his channel is going to be having a fundraising stream. He's going to be going for 12 hours. But we were trying to get him for 24. If you guys could do it, please harass the hell out of him. Let's get him to go for 24 hours. But we're going to be doing it's like a cancer charity event that he's going to be running, and he has a goal to hit. I think it's around $10,000 for donations. So this is hit close to home for a few of us and Max personally. So hopefully you guys show up and help him out. I will be stopping by at some point later in the afternoon tomorrow. Let's see. Max was blowing up the chat at the beginning, so I'm trying to catch up on what he was saying. I'm not even sure what he was saying, actually. Whole bunch of stuff. But yeah, if you need me to say anything specific, please, Max, just let me know in the chat. All right, Crypto Mikkel. No, he's not. You had a death in the family yesterday, the funeral. Oh man, I'm so sorry. That's terrible. I'm sorry, man. Well, my condolences. I apologize. Max said ovarian cancer specifically, $10,000 goal. All right, well, we will hopefully all be in attendance. Appreciate you, buddy. All right, let's get into this. I want to see what the market's looking like today, and then we'll go from there. Oh, things are turning a little bit red. Looks like we're at 26,600 for Bitcoin. Ethereum, 1,600 bucks, just above 1,594. We have Dogecoin. Let's see, 6 cents. Litecoin, 64 bucks. Solana's at $19. I'm gonna be honest. I think Solana might be a good deal to get in on some of that token right there, just because the whole Visa stuff coming out. XRP, 51 cents. BNB, 211 bucks. Check out Crypto Bubbles real quick. What the hell is this? Where did this come from? Because this wasn't here last week, or no, last week, yesterday. It's ranked 99. I guess apparently this thing moved up 55 ranks, which is why it's in the top 100 now. But it's Wemix, whatever this is, up 77%, and up on the day it's 16.1%. Looks like Pulse Chain. What is this? Up 17.5%. Rollbit's back up 9.6%. That dropped pretty good yesterday, if I'm not mistaken. Casp is down 4.3% today, 4.5 cents. I mean, that's still pretty good. Render, what's Render at? Render, $1.56. Man, that's been hovering right around there for quite a while. I need to get back in on Render. I haven't done it yet. And then Chainlink, I saw Altcoin Daily actually put out a good video with Chainlink. I didn't get to watch the entire thing fully, but the format of it was fantastic, and he did use this music we're listening to right now. So anyways, all right, let's check out the Fear and Greed Index, and then we will jump into today's episode. 47 neutral. Fear has been the last couple days, weeks, months. Now it's neutral. It's pretty much all the same until it gets into like the 20s or, you know, above the 60s. Doesn't really matter. I don't think market sentiment is going to change overall. All right, let's see top 10 coins, coin market cap, and then we'll dive into it. Bitcoin, Ethereum, Tether, BNB, XRP, USDC. We have Lido staked Ether, Dogecoin, Cardano, and Solana. Litecoin is still in 15th, and Shiba jumped back up to 16th. So if anybody's wondering. All right, if you guys have any questions in the chat, obviously feel free to ask. This is what it's about. We just watch news together, see what's going on in the space. And this beginning to Altcoin Daily's video was a riot. So let's jump into this. Again, if you guys have any questions, just at me in the chat. Let's do it.
Is it me? Or does it almost seem like the cards are stacked against us? When not even a court decision makes an impact on a regulator's opinion, you know you're dealing with a bad faith regulator.
And so nothing any court would say would change your mind on that?
I wish something a court could say which would actually
He's such a fucking rat.
bring the compliance sooner.
That no matter what happens, Their minds are already made up. CEO of Coinbase, Brian Armstrong, reveals exactly what they tried to do to him and what they're trying to do to the industry.
I think what their true intention or belief is behind the scenes, and I'm speculating a little bit here, is they just don't want it to exist. And so they're trying to cast a shadow over the whole industry to make it difficult. They're just sending subpoenas and Wells notices.
To exist? Why?
I believe it's because, and again, this is just me speculating a little bit, I think it's because they don't want to lose power. They think the government should run financial services. They have their hooks into the big banks. They can pressure the big banks to close accounts on, if you have the wrong political opinion or you're in the wrong industry, you're in oil and gas or whatever the flavor of the day is. They want to be able to pressure companies because they can't get it done through Congress. They want to pressure it through the big banks. And crypto, in America, people should be free to have control of their own money, to use new technologies. It's fundamentally anti-American what they're doing, and I think next year in the elections we need to make sure that all voters and people who are pro-innovation, pro-technology vote people out of office who are trying to curtail our freedoms around crypto.
And I see comments like this, and I just have to think, this is what's really happening. I'm sorry.
Ooh, that's a good. I didn't see that tweet. I didn't get to watch this video in depth, but that's a really good point. Right here, I guarantee you JP Morgan is actively buying Ethereum. Do you remember when they shit on Bitcoin and told everybody that they would fire people if they caught them investing into it? And then all of a sudden they're saying some shit about Ethereum. Weird. Real quick, son of a rabbit panda said in the chat, Wamex is having wash trading, which is, I don't use Wamex, so if anybody's using that. Also, I think Binance is shutting down in the UK, and I'll show that in a little bit, but let's continue this.
What's really happening? I'm sorry, but we know they do this. We know they do this. They create fear, uncertainty, and doubt in the market so they can buy low.
The oldest trick in the book. If you want to buy a lot of something, what do? You shit on it. Right? When George Soros wanted to corner the market in copper, right? What did he do? He didn't go out and buy a bunch of copper. He went out and sold a bunch of copper and spread rumors that copper was going to zero. Then you swoop in and buy a whole bunch after the price collapses.
I have some good news.
Facts.
I have some good news. The same man, the same congressional hero who shut Gary Gensler down, held his feet to the fire.
The biggest crypto failure in history is probably FTX at $9 billion.
This was the best clip ever of him shitting on Gensler.
Were you the chairman of the SEC when FTX collapsed?
Yes,
And how many times did you meet with FTX prior to their collapse?
I think my public record shows 2.
You met it with FTX at least twice. And arguably, the second biggest crypto failure in history was Terra Luna. Who was the chairman of the SEC when Terra Luna collapsed, sir?
We had brought...
You were, sir, reclaiming my time. You were. Does it concern you that your approach to the digital asset industry is actually driving this industry out of the United States?
trying to drive it to compliance, and if they're not complying with the laws...
You say the crypto market is rife with non-compliance. However, existing SEC rules make no sense for blockchain-based companies, and following them would actually kill these businesses. Your regulatory style lacks flexibility and nuance, and as a result, you've been an incompetent cop on the beat, doing nothing to protect everyday Americans.
This same man is fighting for crypto holders' freedoms every day. In fact, America's freedoms every day, people's freedoms.
How much crypto do you think this guy has, Mr. Emmer? How much crypto? Put it in the chat. Take a guess.
Is just one of the bills congressional heroes like him are trying to pass. The anti-CBDC bill. Pay very close attention to how he explains it. Listen to what he says at the end. He gets it.
Extremely proud to have this legislation that, frankly, I've been working on for 3 years at least. The CBDC Anti-Surveillance State Act included in your markup today. It's the first anti-central bank digital currency legislative effort introduced in the United States and for the past 2 Congresses. And we've worked with my colleagues and with stakeholder groups to update, improve, and grow support for this bill. Today, this bill has the support of 60 members of Congress and groups ranging from the Independent Community Bankers Association and American Bankers Association to Club for Growth, Heritage Action, and the Blockchain Association. We've come a long way. This bill is simple. It halts the efforts of this administrative state under President Biden from issuing a financial surveillance tool that will undermine the American way of life. Unlike decentralized cryptocurrencies, a central bank digital currency is a digital form of sovereign currency that is designed and issued by a government and transacts on a digital ledger that is controlled by that government. In short, a central bank digital currency is a government-controlled, programmable money that, if not designed to emulate cash, could give the federal government the ability to surveil and restrict Americans' transactions. This is not just alarming, it's downright un-American. We've already seen examples of governments weaponizing their financial system against their citizens. In China, the Communist Party is using a central bank digital currency to track the spending habits of its citizens. The data is being used to create a social credit system that rewards or punishes people based on their behavior. Closer to home, in the Western Hemisphere in Canada, the Trudeau administration froze the bank accounts of individuals involved in the 2022 trucker protests. That might work in Canada. That doesn't work here. This appetite for financial surveillance.
Could somebody clip that for Panda, please? That might work in Canada, but that doesn't work here.
May be gaining a stronghold, unfortunately, right here at home. The White House issued an executive order placing urgency on central bank digital currency research and development, and the agency reports to that executive order have made it clear that the Biden administration is not only itching to create a CBDC, but they are willing to trade Americans' right to financial privacy for a surveillance-style central bank digital currency. We're not going to let this happen. My bill ensures the United States digital currency policy is in the hands of the American people, not the administrative state, so that it reflects our American values.
What the fuck just happened? Why is it? Does he not know that that went black in the middle of his video? What the?
Privacy, individual sovereignty, and free market competitiveness. American values. American values. This is what the
That's so weird. Did that happen like during this? I mean, it must have happened during this whole meeting. What the
future global digital economy needs. If not open, permissionless, and private like cash, just like cash, a central bank digital currency is nothing more than a CCP-style surveillance tool that can be weaponized to oppress the American way of life. If China embraces it, you know it's something worth standing against in this country. I'd like to welcome all of my colleagues on both sides of the aisle to support this bill, which protects innovation and defends against an ever-expanding government surveillance state. Thank you again, Chairman McHenry and Congressman Hill, for working with me on this legislation, and I yield back the balance of my time.
Guys, crypto is here to stay. Open your eyes. Just this past week in Toronto, the energy was electric for this Chainlink event. If you're interested in the latest updates for Chainlink, watch our video from the other day, this one. I'll share with you a clip that actually wasn't in this video the other day. Listen to the Chainlink leadership themselves give their thoughts on Chainlink as it stands today and their takeaways over their event from the past week.
Well, it's been an amazing 4 days here in Toronto at Cybos. We've met with well over 60 banks, financial market infrastructure providers, and potential partners.
This year, we've executed on our massive successful pilot with SWIFT and 12 other financial institutions that are here at the conference. And this has afforded us just great social proof of working with a great partner with SWIFT. And a lot of these financial institutions are looking at what we did in that pilot and seeing how CCIP can connect and allow assets to travel to different blockchains.
The industry is ready for tokenization. They also recognize the fact that CCIP is the most secure way in which they can perform that. They can actually move their assets from Web 2 to Web 3.
The demand for CCIP is palpable.
These institutions are realizing for these ecosystems to work, you need CCIP to connect all of these different workflows to make capital markets work in a more efficient way.
Is anybody into Chainlink? Anybody here? Did you guys see the video that he put out on his channel? Like I said, it seemed to be a good format. I mean, it's a format I like. It's one that I've taken an approach to on my channel as well. But I don't know. I'm just not into Chainlink. I don't know if you guys are or not. Let me know in the chat. The rest of this time, he just chills. Bitcoin, Miami, or whatever the hell he's going to, that conference. And then, yeah, nothing else. All right, let me see. So I've never heard of this guy. Let me, hold on one second. Let me just pause this. Grab this video. So this is CTO Larson. Is that how you say that? Mr. Alltrack actually told us, or told me to look at. I've never heard of this guy, but this video, let's see. What's it say? I guess just the Fed broke crypto markets. Is this the video you were talking about, Alltrack? Let me know in the live chat if you would. That would be amazing. All right, and then also I do want to kind of cover a few things real quick just before we get into anything else. So this is one thing that's obviously important. Bybit will suspend services in UK following financial regulators' final warning. So headquartered in Dubai, crypto exchange Bybit said it will suspend services to residents in the United Kingdom starting in October due to regulatory changes. So if you're using Bybit, obviously in the US, you're using a VPN anyway, so it doesn't matter. But if you're using it in UK, then you're going to need it, either need a VPN or just stop using it. So that is that's the news there. And then we have right here, Bitcoin miners doubled down on efficiency and renewable energy at the world's digital mining summit. Bitmain rolled out its efficiency-focused Antminer S21 at that summit, and Bitcoin miners shared their plans for boosting productivity via green energy. So this S21, right here. Look at this. So the S21, this is the Hydro, I assume, if I'm not mistaken. It says hash rate 335 terahashes. Efficiency is 16 joules per terahash. Then they have the S21, the normal one, which is 200 terahashes. Efficiency is 17.5 joules per terahash, which is pretty insane. These things are getting more and more efficient. I mean, that's what we're going to need anyways, right? When it comes to the halving and all that shit, it's going to be brutal for these old like S19s and stuff to stay profitable. That's just my opinion. Let's see what this one is. Oh, and also this is inactive Bitcoin addresses hit all-time high. So this is people that are just holding Bitcoin in hard wallets, or cold wallets rather, right? Hardware wallets, in their safes or whatever. They're just not moving Bitcoin, and it's hitting it's hit its all-time high for the 1, 3, and 5 year time frame. So it's kind of neat. It's a good thing. That's hugely bullish for Bitcoin as a whole. Let's see. They said the Hydro and the normal ones would be the same price during the promotional period. That's kind of nuts. Yeah, you think so? Where is it? Let me see. Let's see. I wonder what the price would be. Yeah, that's a significant difference if they're going to be the same price. But with the Hydro one, you guys do need a lot more infrastructure. You need to be able to hook it up to radiators and whatever. I mean, that's more for like plug and play inside a giant ass container, if I'm not mistaken. Bitmain rolled out its next generation Antminer S21 and S21 Hydro ASIC miners at the World Digital Mining Summit in Hong Kong on September 22nd, revealing the crucial performance stats to the entire industry. The entire industry has been waiting for. The S21 has a hash rate of 200 terahashes per second and the efficiency of 17.5 joules per terahash, while the S21 Hydro hashes 335 terahashes and 16 joules per terahash, which is notable given that that until recently most Bitcoin ASICs were operating above 20 joules per terahash level. So that's pretty good on that end. All right, let me see. Did Alltrack say that was the video? CTO vid. Let me see. So that's not the video. That is not it. Let me see. All right, let's find out who this is. You said the video was good, so boo you.
Yesterday.
Nope. I don't know who this guy is. I've never seen him. Oh god. Jeez. I hate this more than anything. Why this thing just blares in your ear as soon as you click on it. All right, let me see. That has to be the video, right? Or is it this one? Let me see. Again, if you guys would like, Yeah, rip your ears. Yeah, sorry, Chris Hanley. I know, it blew up my ears too, all right? I apologize. But let me know what video. I think that was that video, if I'm not mistaken, right? Crazy Fed broke crypto and markets. I don't know. All right, Patrick Murphy, let's see. We'll click on this one then. I gotta copy the link and I gotta put it in here. Let's see.
A lot.
Oh, 30 minutes long. Jesus. 15 security mistakes that will cost you everything. Let's see. Is this actually a good video? Does anybody watch this? Many people are losing their crypto. All right. Sounds good. Let's watch it. We'll hit the like. We'll check it out. I'll put the link in the description. Let's see what this is all about. I've never heard of this guy. So, like and subscribe to him. Check him out. Let's do it.
A lot of real people that I know are losing all their crypto, getting hacked or scammed in present time this year, and not just beginners, skilled professionals. In our Discord, 2 of our members had this conversation. Haha, life is so weird, is that? And then there's an NFT number. That was mine. It was stolen. I did pay 101 ETH for it, but you didn't buy it from me. You got it from the new owners that got it from the hackers. I want to scare you in this video because...
Well, first mistake is being a complete moron and spending 101 Ethereum on a fucking fake picture. Just saying.
There is action to take right now. This is no ordinary little scam and phishing. Myself, I lost all my money, millions of dollars. First, I want to say thank you to this member for sharing your story and the learnings, as you will all see later in this video. In our community, we actually have many high net worth individuals. That's the great thing with crypto and investing. Whether you have 5k or 5 million or 500 million, we can all still play this game together because it's all percentage game. It's like golf or something. You can still play together. But unlike golf, you usually don't know who is rich and who is just starting out. So I really want to thank this member for sharing this in so much detail. And this is not an isolated case. I talk to a lot of people in crypto now. A lady in Sweden recently contacted me because she lost $3 million to a scam. Another guy I know got his wallet drained and he has no idea how it happened. I have another highly intelligent friend who lost Bitcoin in a scam. And Luke, one of the core...
How much you want to bet most of this is because of MetaMask? How much you want to bet? A lot of these people got hacked and they had MetaMask and that's how they lost it.
Bitcoin developers since ages, who is absolutely paranoid about operational security. My PGP key is compromised and at least many of my Bitcoin stolen. I have no idea how. Help please. Never mind many. It's basically all gone. This was a big thing. CZ replied. That was 216 Bitcoin worth $6 million today. This company, Prime Trust CEO, detailed how the company found itself locked out of its own cold storage wallet and losing access to millions in deposited assets, allegedly. But if we go back to our member, as he correctly states here, these are ongoing attacks affecting many OGs from crypto. Very technical people that lost all their coins, more than $100 million starting in April. Now previously, the solution for most people, well-meaning good advice, was to let an exchange or custodian hold your crypto, because the risk of you losing the keys or get hacked if you do it yourself was just too big. Now that may still be true if you yourself know that you're absolutely hopeless when it comes to IT and passwords, but I think for most people that was also pretty bad advice. No one has missed that most of the trusted exchanges went bankrupt last year. FTX, Celsius, BlockFi, Voyager, Genesis, the list goes on. And what was at least not clear to me at the time is that it's apparently not your coins anymore when you deposit them on the exchange. So if they screw up their business, not even getting hacked, just doing bad business deals, that's your money they are losing because it became their money when you deposited it. Remember, I had a lawyer here on the channel last year who explained that laws are just not in the place, at least in the US, to protect you from that. It doesn't matter what the terms and conditions are. Even the custody coins aren't returned 100% in cases like Celsius. And actually that's the same with the bank. If they go bankrupt and they don't get the bailout from the government, they don't have your money and you won't get it back. For smaller retail investors, yes, the government guarantees a smaller amount, but that doesn't exist for crypto, and if you have a lot of money, it's anyway just a small part. Now this...
All right, I want to, I don't know if I want to listen to this entire thing, but do you guys want to listen to this? Do you want to continue to listen to it? I know it, you know, getting hacked or your crypto funds stolen from you, or, I mean, it just, I hate to say it, but it's just, you got to pay attention. Like, you got to pay attention to what you're doing. Don't click on links you don't know what they are. There is a lot of user error, and people do need to understand that you got to know what you're doing to make sure your stuff's safe, right? So just, I don't know if this is I mean, I appreciate the video 15 security mistakes that will cost you everything. I'm going to put this in the live chat, and I'll put this in the description below after the fact. But I think that this is something you guys should sit down and kind of put your stuff next to what kind of he's talking about and make sure you're safe and you're not doing anything foolish, right? Easiest way to say that. And don't click on the 500 airdrops you get on Zelko. Yeah, don't click on any airdrops ever. Like, I don't care. What are you getting, like 15 cents? Like, it's not worth clicking on something that's not worth it, or just, you know, risking your entire bag over something stupid. All right, I do want to get into, let's see. So this is a 25-minute video from Coin Bureau. I don't think I really want to watch that right this second. I do kind of want to watch this though. So the Bitcoin rises, posting its third week of back-to-back gains. This is CNBC Crypto World. They go over most of the news in the space, kind of just like as a whole for the day, and then they are having a like roundtable talk about a few things. And I didn't get a chance to listen to this, so I kind of want to see what this is all about. If you guys have any questions, obviously feel free to ask in the chat. Playback speed is normal, so we're going to continue like that, and yeah, let's do it.
Today, Bitcoin notches another week of gains. And as the buzz around tokenization grows, I spoke to 3 experts in the crypto space who can break down the push to bring crypto and real-world assets together.
And by the way, I wasn't saying that video is bad in any way. It was definitely a good video to watch, but I think it's one that you guys need to sit down and kind of, again, put it side by side with what you're doing and make sure you don't make the same mistakes type deal, you know?
Welcome to CNBC's Crypto World. I'm Tanea McKeel. Bitcoin capping an up week here, registering a more than 1% gain and its first 3-week win streak since March. Ether, meanwhile, slightly lower, posting back-to-back weekly losses and its 5th losing week in the past 6. Both are flat on the day, Bitcoin at about $26,600 and Ether at about $15.90. Not a ton of movement in cryptocurrency prices this week, but interesting to note the Federal Reserve's influence on Bitcoin price may be back in play here following the central bank's latest policy meeting, where it indicated it could keep interest rates higher for longer than previously anticipated. Rates have broken out to new cycle highs, really weighing on long-duration speculative assets, which includes Bitcoin. Chart analysts are looking at a retest of $25,000, some saying it could slide down to $20K if it breaks that support. By contrast, Bitcoin transactions hitting record highs and transaction fees hitting 2021 levels. So much more activity taking place on chain. This is according to CryptoQuant. People finding more reasons to use Bitcoin. It's just not reflected in the price as investors stay on the sidelines and liquidity remains dry. All right, let's jump into our main story. While Bitcoin remains stuck, VC attention is shifting back to Ethereum, while the drumbeat for tokenizing real-world assets, or RWAs, like the dollar, grows louder. This week, I sat down with 3 investors in the crypto space: Stuti Pandey of Kraken Ventures, Maria Shen of Electric Capital, and Kinjal Shah of Blockchain Capital. The 4 of us spoke about RWAs, the growth of stablecoins, and a whole lot more. Here is that full conversation. All right, so thank you all for being here today. I want to start with RWAs because we had a big announcement earlier this week from Citi Token Services. There's also the RWA Summit in Brooklyn, which you attended earlier this week. It seems like it's really been the hot topic of the year. It's been kind of a weird year. Movement is pretty flat, but there's all this buzz that we're seeing again this year that feels a little bit familiar. So if I can start with you, Stuti, what is different now about the space, the market, the infrastructure, anything compared to 7 years ago, the last time I remember this being such a buzzy topic?
Yeah, no, so you're right. RWAs make a comeback, I'd say every 18 months at least in crypto. I'd say every time the benefits remain the same. Like you still have 24/7 settlement, you have guaranteed execution, you have lower transaction fees because you're cutting out middlemen. But I do think there's a few key things that are different this time around. I'd say, like, let's put them in 3 categories. The first is the economics of it. The second is technology. And third is credibility of the space. So in terms of economics, over the past few years, interest rates have been very depressed. And that has favored very high growth, high risk assets. So in decentralized finance, You had synthetic yields between even like 80 to 200%, so RWAs didn't really have a chance to thrive. Now that rates are down, it's actually these real world assets that actually have interesting yield, and they can really benefit from tokenization infrastructure, and they can also get mind share this time around. So that's the first thing. The second thing is on infrastructure. So Ethereum has come a very long way in the last couple of years. Namely, this emergence of layer 2s, which allow for lower transaction fees as well as faster time to finality. And this really expands the design space, especially for financial applications, which RWAs can take advantage of. And finally, when it comes to credibility, I mean, just all this news about Bitcoin ETFs, also Ethereum ETFs, with very key organizations standing behind them. I think crypto is being able to get a little bit of that brand halo upon ourselves, and this is definitely lending some credibility to also RWAs. So, there's a number of things that are different, but there's like in terms of the why now. And now I think it's up to investors and up to startup founders to really take advantage of this.
It's been an interesting year for stablecoins too, which I think are kind of a consumer-facing version of RWAs. And to be very clear, we're talking about tokenizing real-world assets on the blockchain, which are on blockchains, which I should have clarified earlier. Stablecoins tokenizing the dollar, right? And we were actually talking about this earlier this week, but it does seem like in places where there is a more unstable currency, like Turkey or like Argentina, perhaps tokenizing the dollar has expanded access to crypto. Would you say, how does that compare to a place like this? And I know that post FTX, there has been a lot of focus, and the drumbeat for use cases beyond speculative trading has gotten a lot louder. So has that happened? And it's just been an interesting year for stablecoins, with some of the biggest ones other than Tether being down in market cap, and other models kind of being experimented with. So how has this year in stablecoins helped expand access to crypto? Let's go with you, Kinjal.
Yeah, so stablecoins, I would say, are the first sort of data point for RWAs that I think have really achieved product market fit. Today, there are about $130 billion issued via stablecoins. And just in the past 12 months alone, we've seen nearly $6 trillion of volume. So this is a network that I think is comparable to the Visas and the PayPals, if not approaching what they do today. And a lot of what we're seeing is demand from other countries, other sort of local jurisdictions where they don't have access to cheap, reliable currency and cheap, reliable payments. And so I think remittances, e-commerce, I think those are all use cases that small businesses are using USDC and other stablecoins for. Stablecoins don't have to be dollar denominated, but a majority of them are dollar denominated today. And I think in this interest rate environment, there's probably going to be a shift where you'll start to actually be able to attain a yield on your stablecoins, and I think that's going to be a really big trend moving forward.
How do you separate, I guess, the stablecoins as a sector? It seems like a pretty significant sector these days in crypto. How do you separate the institutional use cases from the consumer? If you could just help, I guess, organize that sector for us. What does that look like right now?
Yeah, I mean, I think you brought up a great consumer use case, right? Which is in emerging economies when inflation is very high or when there's a lot of remittance volume, stablecoins looks very, very attractive, especially if there is limited access to USD. Then stablecoins becomes the alternative for a lot of people in Latin America, in Nigeria, and other places in Africa. To actually do some of these remittances and to keep a part of their savings in stable coins as well. And so there's definitely a retail use case. There's also a small business use case where suppliers, when you look at the remittance traffic, a lot of suppliers are paying each other in stable coins or in crypto as well. This is a very small segment, but it is growing. I think the institutional case is also very interesting, and I actually think part of what's different about RWAs this time around is that the perhaps the definition of what an institution is also changing. You know, it used to be in 2018 when RWAs first started trending, we looked at institutions like high net worth individuals, family offices, pension funds, university endowments, and that's still true, but there has been the emergence of what I think of as on-chain institutions. When you look at a DeFi protocol like MakerDAO, which has over $5 billion on its balance sheet, and since it started more heavily putting more of its balance sheet in RWAs, that's grown to over $2 billion of its balance sheet in RWAs, predominantly in US Treasury bills. And so, you know, that's been a really interesting shift that's never happened before when you look at where demand for RWAs is coming from. And, you know, MakerDAO works with institutions that borrow DAI, which is the stable coin, and effectively tokenize RWAs, tokenize T-bills that MakerDAO then uses in its ecosystem. And so, you know, we're really starting to see the point where there's the retail use case, everyday consumers, there's who's using it for remittances and savings, there's businesses who are starting to use stable coins for paying suppliers, and then there's a lot of on-chain activity from these DAOs, these treasuries, these on-chain institutions that are trying to access yield through RWAs and using stable coins as part of that process.
I guess I'm wondering what at this point in time the point is, not to simplify it, but
Sure.
It seems like it's still a little futuristic, like especially with some of these yields being up to 5% now. You know, I do get it with tokenizing the dollar, I think, but what is the point of an institution like Franklin Templeton, which I think does this a lot, of tokenizing treasuries? I'll stick with you.
Well, this is another thing that's different now from 2018. So we do have stable coins, but we also have DeFi infrastructure. That is not something that existed before. Since 2018, we now have DEXs like Uniswap. We have lending protocols like Compound and Aave, and of course we have stable coins that are algorithmically pegged, like MakerDAO. And so all of this to say that when you do tokenize a real world asset, all of a sudden, before you just kind of held it and maybe transferred it to someone. Now you can use it as collateral for a loan. Suddenly the utility of holding a tokenized asset has increased because of the infrastructure that's come in since 2018.
Okay, so who's using these right now, I guess? Is this still pretty crypto native? I know there are institutions that are looking at this for sure, but at what points do we see this take off as something that becomes normal to the mainstream?
Yeah, so I mean, in terms of usage, we already talked about the use case where in certain markets where you have unstable currencies, I mean.
Is anybody else falling asleep or is it just me? I know it's not just me. All right, what I'm going to do is I'm going to let you guys watch this on your own. This is in the description below if you guys are interested. This is, again, Crypto World, CNBC television. It's nice to see a group of 4 women sit around a table and talk crypto. It really is, but I'm about to fall asleep and everybody's looking up Mia Khalifa because, yeah, this girl does kind of look like her, which is funny. But, yeah, I don't know. Anyways, you guys can do that research on your own. Here you go. Here is the link to the video. All right, let's watch. I want to check out what Guy over at Coin Bureau has to say. This is a 25-minute video. If you guys don't want to watch this, let me know in the chat. But Crypto Mikkel's not going live, so I really don't need to rush out of here. So let's get into this. No, I don't want any links. Patrick Murphy, stay the hell out of my chat, you dirty old bastard. All right, let's get into this. The SEC won't stop. Here's what Gary Gensler said. I want Guy to shit all over him. I don't think it's going to happen, but I have high hopes. Let's do it.
The SEC has been going after crypto ever since Gary Gensler ascended to the agency's throne in 2021. At first, it looked like crypto was doomed, but the ruling in the Ripple case and Grayscale's recent victory put the anti-crypto regulator on the ropes, or so it was believed. In a recent hearing, however, Gary made it clear that the SEC is far from being defeated and doubled down on the agency's most recent antics, including problematic rules that could crush stocks and squeeze small businesses. That's why today we're going to summarize the hearing and tell you exactly what it could mean for the markets. The hearing we'll be summarizing today was titled, quote, Oversight of the U.S. Securities and Exchange Commission. It was hosted by the Senate Banking Committee last week, and we'll leave a link to the full hearing in the description. It's worth the watch if you have the time. Pro tip, watch it at 2x speed. Now, the hearing began with opening statements from top-ranking politicians on both sides of the aisle, followed by Gary himself. The first to speak was Sherrod Brown, and he started with an eye-opening statement. He said that new technologies risk further concentrating the power on Wall Street. Now, this is eye-opening because it's quite accurate, at least when it comes to crypto. If megabanks like JP Morgan and asset managers like BlackRock were to take custody of and/or stake most of the crypto out there, then they would pretty much hold sway over the crypto market.
Yeah, and that's kind of what we've been saying. They're collecting and they want to hold as much as they can so they can control the market as a whole.
Something to think about. Anyways,
Gonna
Sherrod continued with another eye-opening statement, and that's that it's been almost exactly 15 years since Lehman Brothers collapsed. For context, the collapse of Lehman Brothers is what marked the beginning of the 2008 financial crisis. Some believe that a similar financial crisis is coming up. And because two eye-opening statements clearly weren't enough, Sherrod threw down a third. 15 to 20% of the US economy is directly or indirectly controlled by private equity. Of course, this includes asset managers like BlackRock, who are infamous for having significant influence over publicly traded companies.
Is that honestly shocking, though? Is it?
Regarding crypto, Sherrod said it's dangerous and that FTX wasn't the only bad apple. He pointed out the fact that there are hacks and scams left and right, but I should note that his tone wasn't nearly as anti-crypto as it has been in previous hearings. This could be because being anti-crypto is increasingly unpopular. In any case, the second politician to speak was Tim Scott. He started by slamming the SEC from every possible angle, including a lack of transparency, a lack of logical leadership, its hostility towards innovation, and its focus on things that are not necessarily related to financial markets. Tim's only eye-opening statement related to the SEC's climate disclosure rules, which would increase compliance costs for publicly traded companies by at least 4 times. If you've watched any of our previous summaries of Gary's hearings, you'll know that this only scratches the surface of what these rules would do.
He's such a fucking troll, Mr. Gensler. Let's see. So buying dirty BTC, not that virgin BTC, says Dakota Miner. Honestly, I think they're going to be accumulating any kind of BTC. I don't think it really matters, virgin or not. The only reason they want virgin Bitcoin, right, which would be mined Bitcoin with actual Bitcoin miners, is because there's no history behind that actual crypto. So there's nothing to get them in trouble to chase the crypto down the trail. It's kind of like shit rolls downhill. Something happens up here and you end up with the Bitcoin, it's gonna get to you eventually, and they're gonna seize it back. That's what they want to avoid. That's the entire point of getting virgin Bitcoin. But yeah, they just want to control it. They're gonna buy as much as they can, and it doesn't matter. At least in my opinion, I don't think it matters.
After Tim finished, it was Gary's turn. He started by saying that his views are his own and not those of the SEC. For reference, this is something that most regulators say when they testify, and it's ironic because it's known that their views do in fact have a profound impact on financial regulations. Regardless, Gary said that the SEC's rules have shaped the US's economic success for over 90 years. However, he said, a gold medalist must keep on training if they want to keep their gold medal. In other words, the SEC needs to keep creating new rules to ensure that US financial markets remain the largest. Logically, this ultimately depends on the rules being proposed by the SEC, something which Gary didn't address. All he said was that the SEC always takes feedback from the public in its rulemaking processes. Note that Gary had admitted in an earlier hearing that the public basically means Wall Street.
I was just going to say, there is zero chance that they take any consideration about the public's knowledge or like anything about crypto when they make rules. They don't give a shit. That's all internal. They ain't asking nobody nothing.
Anyway, once Gary was done, the question period began. The first to ask questions was John Tester. Now, for those unfamiliar, John is a farmer, and he's raised his concerns about the SEC's proposed climate disclosure rules in previous hearings. That's because they would require private as well as public companies to report information. As in previous hearings, John explained that this is because of something called Scope 3 emissions, which require companies to collect information about emissions from their suppliers and even from their customers. For many small businesses, the cost of compliance could be unaffordable. Gary pushed back by saying that private companies are not being directly targeted, but admitted that there needs to be some adjustment to the proposed climate disclosure rules. John was not satisfied. He underscored the fact that these regulations are already bleeding into the private sector. All Gary could say is that they're working on it. I'm sure.
Look at that face. Look at the face he got. He's such a creep.
Sure they are. Sarcasm aside, the second to ask questions was Mike Crapo, and he focused on something unexpected yet extremely significant. In short, a US financial regulator called FINRA suddenly halted the trading for a stock belonging to a company called Metamaterials last December, citing potential harm to investors. Notably, FINRA did not provide an explanation for why they halted the trading of Metamaterials stock. The fact that they cited investor protections is probably what prompted Mike to ask Gary about this issue. Not only did Gary not provide any information, but he also refused to say if the SEC was involved. Now, this is extremely significant for many reasons, but the main one is that it highlights the fact that regulators technically have the power to stop stocks from trading for whatever reasons they see fit. Ever since the Black Monday crash of 1987, stock trading is automatically halted when stocks fall too much. Some would argue that Robinhood's move to prevent people from purchasing GameStop stock in January 2021 set a precedent for stock trading to be halted when a stock is rallying too much.
Yeah, and that was some bullshit when they did that, actually. I remember that. Even though I wasn't into GameStop and I'm not really into stocks, but I remember Robinhood putting this whole thing out stating that they stopped the trading because, it was like on a ridiculous rally. Do you guys remember that? It's crazy.
Now, this remains to be seen, but if it does happen again, then it could become more common over time. Another thing to think about, no doubt. Anyhow, the third to ask questions was Sherrod. He asked a few general questions about a series of topics, including crypto. About crypto, Gary said that any cryptos that are securities must disclose information in accordance with the SEC's regulation. Note that Gary thinks this includes everything but BTC. This inspired Sherrod to say that crypto is causing billions of dollars of losses, to which Gary said that there continues to be significant non-compliance in the crypto industry. To put things into perspective, it was believed that the SEC's recent crypto case losses were putting pressure on Gary to change his tone. Well, apparently not. Now, the fourth to ask questions was Tim Scott. He asked Gary about the SEC's recently proposed rules for open-ended funds, which includes money market funds. For those unfamiliar, money market funds are basically like TradFi stablecoins, except they share a portion of the interest earned on their reserves with investors. If you've watched any of our videos about the banking crisis, you'll know that money market funds have seen lots of inflows because of rising interest rates. Naturally, the SEC wants to protect investors by making it harder for investors to cash out of money market funds during a time of crisis. This is why Tim asked Gary point blank if the SEC would be stopping its proposed rules for money market funds and the like. Gary said that they've given ample time for feedback. Tim disagreed because the rule had more questions for feedback than the Dodd-Frank Act passed after the 2008 financial crisis. Put simply, it appears that the SEC is rushing out these rules for open-ended funds. Anyway, the fifth to ask questions was Bob Menendez. He asked Gary about how the financial industry is using AI. As part of his response, Gary predicted that a future financial crisis will be caused by AI. This is an eerie prediction considering one of the only things currently holding up the stock market is the AI narrative. Maybe Gary had watched 2001: A Space Odyssey the night before. Anyway, Bob then pivoted to asking about diversity and inclusion, ESG type criteria, if you will. Gary confirmed that the SEC views that investing based on diversity and inclusion is not a breach of fiduciary duty. This doesn't really make sense, as fiduciary duty requires asset managers to maximize returns for investors. Bob then pivoted again by asking about the aforementioned rules for money market funds. Even Bob believed that these rules were unprecedented and asked Gary what inspired the SEC to introduce them. He revealed that it was because of the pandemic flash crash in March 2020. For those unfamiliar, some money market funds broke the buck during that crash. In crypto terms, the money market funds temporarily depegged. Again, the SEC's solution to this depegging risk is to just make it very difficult for people to cash out of money market funds during a crisis. Great plan. Note that some stablecoin issuers are holding a portion of their reserves in money market funds. Anyhow, the sixth to ask questions was Mike Rounds. After scolding Gary for not answering the letters he's been sending the SEC, Mike revealed that the SEC's proposed AI rules would include almost every kind of market analytics tool. He said this proves that the SEC is hostile towards new technologies. Gary didn't flinch. He just confirmed that yes, the AI rules would include just about every kind of market analytics tool, even if it doesn't use AI. So long as it gives any predictive power to the user, it will be within the SEC's oversight. As always, this is being done in the name of investor protection. Makes you wonder if any crypto platforms will be subject to the SEC's oversight too. Speculation aside, the sixth to ask questions was Catherine Cortez Masto. She asked Gary how the SEC will use AI. Gary revealed that the SEC is already using AI to, quote, analyze patterns in the markets, which is truly terrifying. The only thing more terrifying was Gary's answer to Catherine's crypto question. Catherine asked if the SEC has enough staff to regulate crypto. Gary said no, because the crypto industry is, quote, rife with more misconduct than any industry he's ever seen. All I could think about was the SEC's increasing scrutiny of Binance and its recent move to unseal previously sealed documents.
Yeah, and they also got the denial of going after Binance. The judge denied them to have access to Binance's funds just because they don't have enough real reasons as to why they should have access to the funds. So the judge told them they need to come up with something new.
Now, the seventh to ask questions was Tom Tillis. He asked Gary what impact the SEC's rules would have on market liquidity. Not surprisingly, Gary didn't have an answer. Then the eighth to ask questions was Mark Warner. He asked Gary about AI. Besides the use of AI and deepfakes in elections, Mark said he was concerned about AI undermining trust in US financial markets. All Gary could say was that new technologies will require new laws. Thankfully, Bill Haggerty managed to ask some questions that we actually wanted to hear the answers to.
Real quick, Max said, WTF, he said, oh, I get it. Only the SEC can use AI in the crypto markets. GTFO, get the F out.
The main one was what it would take for a spot Bitcoin ETF to get approved. Interestingly, Gary didn't have any details. He just said that the SEC is reviewing existing proposals. Now, this is interesting for many reasons, the main one being that asset managers like Fidelity have reportedly pressured the SEC to approve their spot Bitcoin ETF applications in the past. Now that these asset managers have filed, it's possible that Gary is walking on extra eggshells about these applications. They're the ones the SEC collects feedback from, after all. Then the 10th to ask questions was the one and only Elizabeth Warren. By now, most of you will know that Elizabeth is probably the most anti-crypto politician in the United States.
He meant to say she sucks. She's awful.
That's why it's surprising she didn't ask any questions about crypto. Instead, she asked a bunch of questions about private equity. During her exchange with Gary, it was revealed that private equity firms hold over $26 trillion in assets under management and saw inflows of $4 trillion last year. Elizabeth contrasted this with the fact that only $1 trillion went into public markets last year, a clear gap in oversight. J.D. Vance had a similarly aggressive line of questioning. The only difference was that it was extremely political. The only thing I'll say about that exchange is that the SEC's enforcement activities seem to be partisan under Gary's leadership. JD warned that this partisanship could flip in the future. To be honest, this flip would probably be very good for crypto. Perhaps it's just a coincidence, but the Democratic Party appears to be more anti-crypto than the Republican Party. Right now, the SEC appears to be aligned with the former. An alignment with the latter could therefore be good for crypto. Anywho, the 12th to ask questions was Chris Van Hollen. He revealed something fascinating, and that's that countries like China are investing heavily in US private equity, and cited a Financial Times article as proof. I'll leave a link to that article in the description if you're interested. What's even more fascinating is that Gary didn't take issue with this fact. He said that the SEC is neutral about where investors are coming from, so long as they abide by US securities laws.
God, he sucks so bad. He said that.
This is a bit shocking, given the geopolitical backdrop. Then, the 13th to ask questions was Cynthia Lummis. By now, most of you will know that Cynthia is probably the most pro-crypto politician in the US.
And clearly the SEC has aged her quite a bit.
And may Satoshi be with her. Unlike her anti-crypto counterpart, Cynthia asked many questions about crypto, most of which focused on crypto custody by banks. To bring you up to speed, banks are essentially the only crypto custodians that the SEC recognizes, but it has effectively told banks that it's unsafe to custody crypto. This is because it requires them to report custodied crypto as if it was an asset on their balance sheets. This comes with lots of regulations. Cynthia asked how this rule made any sense if even Fed Chairman Jerome Powell believes it's a bit ridiculous. Gary explained that it has to do with the details of Celsius's collapse, which I won't get into here. Cynthia said this explanation was an excuse, and it subjects banks to unreasonable regulations. Go Cynthia. Then the 14th to ask questions was Tina Smith. She asked when the climate disclosure rules would be ready. Gary didn't provide an exact timeline, but explained that it's taken about 19 months for the rules for open-ended funds to be hammered out. He also said that the SEC is not in a rush. If you watched our video about the EU's upcoming ESG regulations, you'll know that the SEC's climate disclosure rules could pale in comparison once they come into force. Make no mistake, they are going to affect US companies and consumers. Be sure to watch that video if you haven't already. Then, the 15th to ask questions was Katie Britt. She reiterated that the SEC's rules around open-ended funds are even more elaborate than the rules it proposed after the 2008 financial crisis. She said that all of these rules reveal that the SEC isn't listening to the average person. It's listening to Wall Street instead. She then asked Gary about another ESG-type rule the SEC has proposed. He just said that it's going to take time to hammer it out, to which Katie said that the SEC needs to think more about what effects its rules are having on everyday people. Some would say that's a tall order for Gary and the gang to fill.
Yeah, I was going to say, they don't give a shit.
And this ties into the questions asked by Kristen Sinema. She asked if the SEC listens to any small investors when it's making new rules. Gary said yes, the SEC reaches out to these small investors on social media. Go back and re-watch his answer because it's unbelievable. There is no way the SEC listens to this feedback. Just look at the engagement with the posts the SEC makes on X. It's all comments about how Gary should resign and how the SEC sucks. If the SEC was truly listening to this feedback, Gary would be long gone.
Hold on. Gary, these beanie babies are securities. Gensler. Oh, it's hysterical. That's great.
Gary would be long gone.
SEC is going After content passes and creative innovation, what's next? Pokemon cards, action figures, concert tickets.
Heck, even Kristen wasn't convinced by Gary's answer. The 17th to ask questions was Steve Daines. After bashing the SEC and calling Gary an unelected bureaucrat, he asked him how it's possible that the SEC can pass all of these rules without congressional authority. Gary said that it's because they all fundamentally relate to disclosures. Clever. Now, the last to ask questions was Jack Reed. He asked Gary to tell the hearing more about private equity, specifically if it's creating competition for banks and if they are a risk. Gary explained that private equity was a $1 trillion industry just a few decades ago and has since grown by almost 27x. This has made private equity larger than the banking sector, which currently stands at around 23 trillion. Jack asked if private equity is subject to the same requirements as banks, specifically KYC. He noted that there's evidence that even Russians continue to work with private equity in the US, despite sanctions. Gary admitted that there needs to be more discussion about this. When Jack asked if the SEC can do anything about it, Gary said no, that's all up to Congress. An ironic statement given that the SEC feels comfortable doing many other things without congressional approval. And
yeah, like fucking suing everybody.
to add insult to injury, Gary didn't even give a clear answer when Jack asked him whether he was concerned about Chinese and Russian nationals investing heavily in US private equity.
His accent makes it sound like he says jackass instead of Jack asked him.
Nothing to see here. Now, this brings us on to the big question, and that's what all of this means for the markets. Well, the answer depends on which market we're talking about. In this case, there seem to be three markets that the SEC is affecting with its antics: the crypto market, the traditional markets, and the economy itself. Starting with the crypto market, Gary's testimony suggests that the SEC isn't finished doing damage. The quote about the industry continuing to be rife with non-compliance says it all. It's safe to assume that the SEC won't turn its focus away from crypto until the entire industry has come into compliance. Now, the silver lining to this is that the SEC has likely done most of the damage already. It's sued Binance, it's sued Coinbase, it's sued multiple crypto projects, and it's sued multiple NFT projects. Sure, it could continue doing all of the above, but this has probably been priced in already. The only wild card in the deck is the SEC's attitude towards the spot Bitcoin ETF filings.
When do you guys think these are going to get approved? What's your guesstimate? Put it in the chat. I want to know, do you guys think it's going to get pushed to next year? Or do you think the ETF approval is going to get approved like October, December-ish? Let me know what you guys think.
As we've seen, Gary has been very tight-lipped about these applications, and not just because he's inherently incapable of providing any regulatory clarity whatsoever.
I almost feel like it's going to happen in October this year. I don't think they're going to push it out too far, to be honest. That's just me.
BlackRock, Fidelity, and other such asset managers are seriously big players, and I can't stress enough how much of an influence they have over government entities like the SEC. Now, it's assumed that the SEC will eventually approve these applications purely because of who these entities are, but that could be wishful thinking. From our perspective, approving these spot Bitcoin ETF applications will require some significant changes to the crypto industry first. We can't say for sure what changes these are, but oversight of spot markets and of crypto custody seem to be two areas that the SEC still needs to see improvement in. This relates to the SEC's rulemaking in the traditional markets, which are becoming increasingly hostile towards private equity. The line of questioning from some of the politicians in the hearing suggests that there seems to be some tension between private equity and the banking sector, which is possible. If you watched our first video about the SEC, you'll know that Gary spent most of his career at Goldman Sachs and that the SEC allegedly destroyed banking documents related to the 2008 financial crisis. It's possible, if not likely, that megabanks have an even bigger influence over the SEC than asset managers. Come to think of it, it's possible that the SEC's seemingly nonsensical rulemaking is a consequence of the tug of war between these two factions. What's funny is that this is something we've literally been speculating about for years, and it seems that it's finally starting to come to the fore. It's actually happening. Now, it's unclear what effects the SEC's proposed rules would have on the stock market, but it's clear that some rules, such as the climate disclosure rule, will increase costs. This should decrease profitability, but this decline in profits could be offset by funding from ESG-obsessed asset managers like BlackRock. That said, some of the SEC's proposed rules for the stock market will in fact bleed over into the actual economy. As Senator Tester noted in his testimony, almost all farmers in the United States work with publicly traded companies. Squeezing these farmers could result in economic issues, such as inflation. These economic issues would eventually find their way into the stock market, and what
Are we already not getting hit with inflation? I'm so confused.
happens in the stock market would eventually affect the crypto market. The good news is that most politicians seem to be hyper aware of this, regardless of which side of the aisle they're sitting on. The bad news is that the SEC has shown that it doesn't much care for congressional oversight, except for when it relates to something that Congress actually wants it to do, like assess the influence of foreign investment in private equity. This means that the SEC could continue its anti-everything rampage. This rampage will likely continue until Gary's term is finished in 2026, or until he steps down to assume an even more powerful position like Treasury Secretary, which he has reportedly been gunning for. And a change in US leadership could also stop the SEC in its tracks. That could happen as soon as 2024. And if you happen to be wondering which US presidential candidates are pro-crypto, we happen to have a video about that, and the link will be down.
Who gives a shit? They're just gonna fucking use it to get votes. That's all they're doing, to be honest. All right, I want to show you guys this real quick. Shout out to Coin Bureau for that video. So this is the ETF filing like dates, right? Where the final deadline dates are. So it's not 2025, it's 2024, which is the beginning of next year. As you can see right here, 3/19/2024 is the latest date. This is for Valkyrie, I guess. BlackRock's deadline or final deadline is 3/15/2024. So it's yeah, it's coming up pretty quick. But the ARK invests, as you can see, they are 1/10/24. So I have a feeling before this date, every one of them will get either approved or denied. I'm assuming approved by this date. But I don't think I would be very shocked if it came out and they approved it in October because of the second deadline. I mean, people probably expecting this. I think this could change things up pretty good. So I don't know. I wonder if they would do this. What do you guys think about that in the chat? Let me know. All right, let's get into some other stuff. I want to see, again, I don't need to get out of here just yet. I want to know what you guys are mining and what is the most profitable thing to mine as of right now. Let's see. So the KS3 is still up here. KS1, S2. What is the KS3M? What is this shit? What is this? Does anybody have one of these KS3Ms? Let's see. 59 grand a year. It sounds great. 10 cents per kilowatt hour. Looks like $8 bucks a day. I never even heard of this KS3M. I haven't really looked at the miners at all in the past like 3 weeks. I think I have heard of this actually. This was the thing they were talking about, doing like a firmware update, right? And changing one to the other or some shit. I don't know. Anyways, X16Q. This one is one that I have personally, and I do need to get some other stuff going on that. I actually mined Octaspace for like 5 days. Octaspace, Pac-Man, and Zill. Honestly, I don't even know how much Octaspace I got. I really have no idea. I haven't looked, but I stopped mining it just because it was hot as shit down here, and I got to get that thing it's right next to me. I got to get it out in the trailer. What's up? No comment. Good to see you, buddy. Let's see who else is here. No whale coin. Oh god, whale coin. What is whale coin? That's a thing. That's a thing. I don't know why I can't click on anything right now. This is not working. Not opening. Don't know. Mine the ASICS broken. Well, all right. Looks like it's broken. What are you guys mining? Let me know in the chat. Let me know in the chat. RDX is killing me. Really? What's going on with RDX? You know, let's go to CoinGecko and see what everything's at. Let's check out the price of Caspa first. I want to see. I want to see where we're at. 4.5 cents. I mean, dude, this is pretty crazy. The Caspa's actually been riding that hard. It's nuts. What's Flux at? Flux might be a good buy right now, actually. Only at 32 cents. That's crazy. That's crazy cheap. That's crazy cheap. I don't know. What do you guys think? Flux a good buy right now? Let me know in the chat. Let's check out Radiant. XRD. Is that what it is? Is it RXD? I always fucking... dyslexia hits me hard when I type in this one every time. Oh, it's under a penny. What the hell's going on with this? Was it ever a penny? What's all-time high? Oh, it's almost a penny. It's all-time high. Jesus, it's down pretty hard. Holy shit. Taking quite the shit. So it's at 1/10 of a penny. 1/10 of a penny. Man. I don't know. What do you guys feel about this coin? What do you guys think about this coin? Let's see. Yes, Flux is a good buy at that price, in my honest opinion, says Max Voltage. Yeah, I was thinking the same, Max. To be honest, I think it's a good buy right now. I swapped some coin into it, to be honest. Actually, what's Dynex at? What's Dynex at? Dynex is like halfway down too. I still can't believe Dynex flipped Flux. It's crazy to me. It's crazy to me. I mean, I get it makes sense that the, you know, mining is easy on it, but it's like, it just blows my mind that it's like popped off like it did over $1. $1.25 all-time high, or $1.31 it says. It's nuts. Is anybody still mining Dynex? 64 cents. Is it still profitable to mine? I assume it would be, right? What's Render at? $1.56 or something. $1.52. Yeah, $1.56. Look at that. Bingo. I remembered. Look at that. I have the worst memory on the planet. And I remembered it. I mean, I guess we didn't see it too long ago, but its all-time high was $8.78. Holy shit, Render was up there? Hold on. This was in 2021. Shit, I didn't even realize it was around this long. It came out in 2020. 2021, it popped off pretty good. Wow. To be honest, if Render is I mean, I don't see why it wouldn't be legit, but I highly see the demand for this coin at some point. This is more or less, I mean, it's in the name, Render, right? It's compute power that would be rendering things that you would need, more or less like how would I compare it? I would assume that it works like people renting rigs from Vast AI, right? You use it for whatever you need it for, but like this coin specifically, like this platform, you would obviously use it to render like videos or whatever. So like when you make a video for YouTube, or like even this right now, my GPU in my computer is rendering this video feed to YouTube for you guys. So if I want to make a video and I export it, it has to render that video into a package, then I can upload it onto YouTube, and that's what this will do with this coin apparently. So I don't know, I think this has a pretty good potential, but I don't know, it'd be neat if we were able to get into it. I think you gotta like sign up for it and shit. Can we get a feel of how people feel about Caspa? I thought consensus was with hash rate going through the roof, price would go down. Thoughts? Sustainable crypto. That's a good point. That's a good point. I'm gonna be honest, I thought Caspa was gonna take a giant shit. I thought it was gonna take a giant shit. But you know what's like concerning to me, I guess, Caspa, just the fact that, I guess it's not really concerning, but it's just kind of like, look how much is left, right? Let me zoom in here. So on the max supply, there's only 8 billion left, right? I say only, it's quite a bit, but at the same time, there's already 20 billion out. Max supply is 28 billion. So only 8 billion left. There's not much to go around overall with all these machines coming out, but I don't know, the price appreciation is kind of it's kind of neat how crazy it's been, right? When did the KS3s and stuff come out? Was it the end of August? I mean, to be honest, I thought the difficulty was gonna screw up the price and all that shit, people were going to shut off. But hey, I don't know. Casper is way over. You think so? Yeah. I thought it was going to friggin' just completely take a shit, but it didn't. Now let's see. Red Panda's buying up all the Radeon 7s for Dynex. You think so? Is that what he's doing? Is that what he's doing? Let's see. I am surprised that KMD so strong. KMD, what the hell's that? KMD, what's that? If there's any coins you guys want to look at, please throw it in the chat. KMD, Komodo? What the hell is Komodo? What is this? Komodo, rank number 500. Historical. Hold on. Moto. AMD. Is that on here? It is. Equihash. Souls. Let's see. Website. What is it? Never even heard of this. Moto introduces Komodo Wallet, the ultimate decentralized non-custodial solution. Launches Komodo SDK. Learn, build, grow. What is this? Komodo Wallet? The wallet? The wallet that has its own coin? All right, I'm gonna play this. I'm gonna see what this is.
If I asked even like back in the day, any of my guys, and
Never mind, it's 16 minutes long. I thought it was gonna be like a quick thing. I thought it was gonna be a quick thing. I don't think it's gonna be quick. Never mind, I'm not gonna play that. It's old. Wow, the blast from the past. Never even never heard of it. I haven't been in mining as long as a lot of these guys, so it's yeah, I've never heard of it. Cool little character though. Speaking of characters, I downloaded this app called Nomad on my iPad to start 3D printing stuff, and I made this last night. I 3D printed that. This little gremlin dude. I literally built this out of circles and scratch. Hysterical. Thing's kind of cool. I wanted to see how it printed, but that little character reminds me of it. That's funny. That's funny. I gotta make some new stuff for the Misfit Mining store. Again, if you guys are getting here a little late, Bybit will suspend services in the UK following financial regulators' final warning. Again, it's due to regulatory changes. They're going to be shutting down Bybit services to the United Kingdom. So guys, make sure you guys are paying attention to that if you use Bybit. The Antminer S21 that was just announced at World Digital Mining Summit is actually pretty sick. It's got a hash rate of 200 terahashes per second and an efficiency rating of 17.5 joules per terahash, while the S21 Hydro hashes at 335 terahashes and 16 joules per terahash, which is notable given that until recently most Bitcoin ASICs were operating above 20 joules per terahash level, which is pretty cool. All right, let's see. Where did you get a tiny model of RPM, right? You know what? I was gonna try to create my own guy next, but this was like there was like a tutorial on how to make this guy, right? So that's what I kind of followed and then did like a little tweaks myself. But I'm going to learn how to make my own character 3D printing. All right, let's see. Is there any other questions in the chat before we get out of here? Let's see if there's any new coins real quick just before we jet, because I would like to see. POW blocks ETH hash. What's this? 15 days ago. Oh wow, looks like a whole bunch of coins came out and then nothing for 15 days. Strange. Luminix. Is anybody mining any of this shit? Anything here? Which one are you guys mining, if anybody's into it? Neura AI for the win, says Nicholas. Neura AI. What's that at? Let's see. Let me see. NEU. Neura AI. This one. XNA. Yeah, this is one of them coins too. Some of them AI coins. 10th of a penny was all-time high in August. Taking quite the shit since. How come? I wonder what happened. I wonder what happened. See, like, a lot of these coins, man, we got to be careful, because, like, what happens is the devs and, you know, they'll get this Discord and be like, oh, this coin's awesome, we're all here for each other, and they'll make like this coin pump, and then the devs are like, yep, fucking see ya, and they like sell all their shit, and then you guys are all stuck with it, and now it's down here. You know what I mean? So I don't know, there's got to be some, like, you got to make sure there's principle behind the coin that you're into. Right now AI is kind of like, I don't want to say it's just a buzzword, because it's not just a buzzword, but it is at the same time. You just got to be careful. You got to make sure that there's actual good things behind projects that you want to get into with AI. You know what I mean? Oh, let's see. Neuro AI partnered with Flux. Did they really? Nice. Oh, let's see. Yeah, warned folks for that a few months back, just like 2018, 2019. And that's gonna happen, man. It's crazy. Jeff Key's 100% right. Did they really partner with Flux? I didn't know that. That's neat. Nicholas Pitts. That's neat. I didn't know that. Let me see. Pump and dump fundamentals. No comment. Says that we'll be selling AI hash in 24 months. Let's be honest. Flux should be at $1,500 already. They are Flux Labs partner. Okay, not a Flux partner. That makes sense. Okay, much more sense. A lot of the smaller coins tripped and fell after July, including XNA. Yeah, there's a lot of just a lot of uncertainty, and I feel like, let's be real, a lot of people are probably just nervous, you know, for things to go south with the SEC, all the rules. Like they're going after everybody. Like I'm gonna be honest, there's that one platform that we all know that shall not be named. If anybody knows, put in the chat. The exchange that's based out of California that has not been hit yet, which is kind of I don't know. I'm waiting. I'm anticipating something bad to happen and it to be shut down. That's just my opinion. That's just my opinion. It doesn't start with a B. No, I don't want to say it though. We'll see. We'll see what happens. It's pretty much like the only place that I will use to trade my Caspa and Dynex and things like that as of right now, but it's a total pain in the ass to use, and they're definitely ripping people off. So we're gonna see. We're gonna see. I know a lot of you guys know what I'm talking about, but anyways, all right, guys, I get the hell out of here. Yeti, good to see you, buddy. Thanks for stopping by. Everybody, hopefully you guys have a great and happy Saturday. I'm gonna try to get the wife to come on live with me at some point if we can. If not, I'll be back Saturday Night Live, 9:30, 9:45 Eastern Standard Time. If you guys are interested, please stay tuned for that. Again, tomorrow, Max Voltage is going to be doing a 12-hour live stream for ovarian cancer. It's going to be a completely donatable stream. He's going to collect everything for donations, and he has a goal of $10,000. He's going to donate it directly to the cause, and I think he's given away a computer of some sort, maybe. I don't know if that's still the plan, but something is going to be donated on behalf of himself for people donating, right? So hopefully you guys are there for that. And again, enjoy your weekend. I will catch you guys in a little while. Oh, 12 hours or so. Not even. What time is it? 10:45. So it'll be 11 hours. See you guys in 11 hours. Stay tuned and peace out. 3060 Ti if we meet the goal. That's what Max is going to be giving away. 3060 Ti. So stay tuned for that. All right, guys. Have a good day. I'll catch you soon. Peace.